Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
G'day, welcome to the Australian Property Podcast. This is our weekly 2 cents segment. We're on a mission to become Australia's most trusted property podcast, and we take a plain English look at the big 3 property news stories of the week. And I'm joined by Chris Bates. How's things, Chris?
Things are good here, Pete. How's life tracking for you?
It's pretty good. I've just working on a new book deal this week, so I've got a book coming out in the new year, which I'm excited about. Just letting the ink dry on the contract, or at least working out the terms and conditions. But co-authoring a book this time around with Kate Bakos, so really excited to put that one together. So it's keeping me busy. How about yourself? What's news?
Is that number 5 or 6 or?
I think I've lost track. It might even be my 7th published book. I've done a few. I've done a few other bits and pieces, sort of ebooks and the like. But actually, I think on the shelves this will be number 7. So pretty excited. Actually, it's been a while since I've got one out there. So looking forward to that. What else is news?
Oh, things are good here. We've got some big, exciting changes with the business, which I can't reveal too much, but everything will be revealed in early next year, which is super exciting. So I'm spending a lot of time organising that change. But we've just spent the weekend up in Newcastle for Mum's birthday, which is awesome. It's always good to walk along Merriweather Beach and have a coffee down there. So, head down, bum up for Christmas now. It's only 3 or 4 weeks, and I'm off to Thailand in January, so I'm excited about that. But feels like a long time away, the holiday. I'm not even thinking about it yet. Just get through this next 3 or 4 weeks.
It's the home straight, I guess, running into the Christmas break. Now, I was just flicking through the news this morning. I know you saw it as well. So this has come sort of hot off the press, and it said that the Minns government is going to force councils to lift long-standing bans on building terraces, townhouses and 2-storey apartment blocks in some parts of New South Wales. So this is obviously a fresh news story this morning for us. So have you had a chance to absorb any of that yet?
Look, I think it's something that's been in the pipeline for some months. They've been leaking little bits of information that they are going to make some pretty big changes. And I think all of it hasn't really all come out yet. So I think we're probably jumping the gun to talk about it this week. But next week, let's do a super special on it, because it is big news. When you're changing zoning at a whole city level, it's going to change where developers can and can't build, and potentially where they're going to build. And I think it's something we should probably do a deep dive on next week. But it is some big news. So what are we going to cover this week instead, Pete?
This week's 3 news stories. Auction slowdown is clipping house price momentum. So a few different outlets covered that story. It's a big weekend of auctions, over 1,000 in Melbourne and quite a few in Sydney too. So is that just slowing the market as we go into the Christmas period? Seems to quite often happen, actually. We get the market kind of runs out of steam as we get towards the end of the year, but also what does it mean when we open up again in 2024? Secondly, Airbnb swallowing rental homes. This was a macro business article. I think it was a data insight from Louis Christopher at SQM Research, showing the increase in Airbnb listings since 2016 to 2023. And I guess there's over 200,000 of them in Australia now. And just a look there at what that's doing to the rental market and how big an impact it is actually having. And then third news story of the week, high house prices are killing off our entrepreneurs. This was John Kehoe in the Australian Financial Review. I guess this is a point that sort of raises itself every so often. Does a rising or a strong housing market, is that good for entrepreneurs because they can use some of their equity and get a small business loan and maybe get an asset base behind them? Or is it an impediment to entrepreneurship because the high cost of housing requires more people to work with 2 incomes and sort of working around the clock to pay the mortgage bill? So those are the 3 stories we'll look at. So we start with the first one, Chris, auction slowdown. So I guess almost every week now we get sort of an auction report that goes out there. CoreLogic does a really good one that's usually out by the end of the weekend. And I guess, yes, the general trend has been over recent weeks that the preliminary auction clearance rates are on the way down. We've had quite a lot of auctions. There's, I think, over 1,000 in Melbourne this weekend, just gone. I guess price growth seems to have slowed down a bit as well. I know you made the point last week, maybe there's a bit of a multi-speed market going on and some properties are doing better than others. But how do you think things are shaping up? And will that kind of slower sentiment carry over into 2024? Or does the new year bring a kind of a reset?
Look, I do think the auction clearance rate is really, in my mind, just the desperation meter of the market. So, at 60, 70%, it's not that desperate. But if it goes to 80% or even 90%, it shows that everyone's just buying absolutely everything, even if it's good or bad, because they're desperate. And, and we've seen that in boom times. And then you can see the opposite. When it gets to 50, 60%, you can see that people are very selective. They're very picky. They're not going to buy anything unless it's actually a quality asset. And so, when it's in that sort of 60 to 70% range, I think that's like just a balanced market. And, I think it should be that type of market at the moment. When you've got interest rates over 6% now, particularly with the last rate rise, your borrowing capacity is down 35, 40%. Everything shouldn't be selling like hotcakes, right? It should be, buyers should be very selective. But if a good asset comes on, and there, even though there is a lot of auctions happening, there's still listing numbers. Overall listings are really low. Particularly the housing markets in our capital cities, not the unit markets. And so if you're sort of hanging around, you're looking for a house, there's not much on the market and it's a good asset, you've got to gamble whether you hold off. And, waiting for that dream asset, the best street, the best aspect, could mean that you miss 6 months or something like that. In this marketplace, it might be another 5%, etc. So I think the auction clearance rates, coming back down makes sense given that prices have come back up a bit, and interest rates are still really high. And so I think this recovery is running out of steam a little bit. That's sort of what all the numbers are pointing to. But that doesn't mean that subsets of the market won't continue to kick on in 2024. And I think that's going to be the case. I think we're still going to see very low listings because high rates mean that, very low turnover because people can't afford to keep jumping. Or don't want to, upsize when the rates are high. And so you're still going to see low stock of good assets. And I do think there's still momentum in the market. And while this intergenerational wealth has surprised me this year, I think there's still, billions and trillions of dollars that are going to get passed down in the next few years. And I think that's the thing that will support prices back into 2024, even without rate cuts or higher borrowing capacity.
It's an interesting point. I saw Ray White's chief economist, Nerida Conisbee, said that some loss-making sellers are just selling up, which is starting to favour first-home buyers. That's definitely something I've heard a bit about in recent weeks. Investors who bought properties that have been underwhelming sort of over the last cycle, and particularly now they've got some cash burn as well. I think a lot of people are thinking, you know what, I'm just going to cover losses with this and move on with my life or move on to the next investment. And I think we're seeing more investors getting out of the market than coming in, which is obviously having a knock-on impact to the rental market, as we'll come on to in a minute. So I guess, the property forecasters, there's a bit of a dichotomy for next year. Louis Christopher at SQM says there could be some modest price declines, maybe in Sydney or Melbourne, but Ray White, Nerida Conisbee, she sort of said, well, do we really expect prices to decline when we've got an enormous shortfall of housing projected over the next year or two, 40,000 dwellings, in a year and so on. So she's sort of saying slower price gains, but nevertheless similar price gains in 2024 to what we've seen this year. So I guess it's that tug of war, I guess. We've got record population growth. We've seen rising mortgage rates. And I guess the last rate hike has just tapped on the brakes a bit further. But as you said, just the same day that article came out, there was another piece in the Fin saying Sydney Harbour House in, I think it was Seaforth, sold for $1.5 million over reserve, $12 million sale. So even though, yes, overall the price growth seems to have sold, it's a pretty thin market overall. It's not like transaction levels are pretty high. And the odd property is just going blasting past reserve. And I would just add as well, so the Brisbane market probably hasn't slowed anything like as much as Sydney and Melbourne, and activity is still pretty hot up there.
Yeah, I think Brisbane's got that affordability benefit, right? When rates are higher and borrowing capacities are tighter, even if people wanted to borrow more money, they can't at the moment. And they're saying, well, my budget is X. That can't get me into the areas I want to be in Sydney, Melbourne. But, we haven't got strong family ties. I've been up to Brisbane. I've been up to Southeast Queensland. We do need to get something secured for our family. We're going to be, our borrowing capacities are unlikely to go up much in the next few years because of our incomes aren't likely to go up. And so if we wait for our incomes to go up and borrowing capacity go up, well, we might miss out because prices could run on us. And so I think there's that little bit of that fear that if we don't act now and prices run on us and our borrowing capacities can't go up and we have no access to intergenerational wealth, which a lot of people don't, it is the inequality debate. And so, I can see Brisbane really piggybacking off that and, winning because it is much more affordable up there to get something for, your long-term family. Louis Christopher's done his boom and bust report. So that's what he's been in the news pretty much every day the last week. I've got him coming on the podcast in 2 days' time. And so it's going to be good to go a deep dive on that and be good to get Nerida on her actually as well because she's got the whole real estate view as well at what's happening at Ray White. But 2024, I do think you're going to see this split. We are seeing investors selling. We do go through looks of the people who have left our business over the last few months, and it's people who are usually selling investment properties. It's people who have, maybe they've done all right out of it, not always loss making, but by selling that, it just relieves a lot of pressure, and it doesn't. Not a bad time to sell. Yeah, maybe they could sell it higher in 1 or 2 years' time, but it is a bit of a cash burn anyway. And why not take my money on that if I wasn't going to hold it long term? Because I can still get a good price if it's a house in a capital city. That'll give me more buffer to help me protect my home. And that's what people are more likely to do is sell investments and try to keep their home. So, 2024 is going to be exciting. What's our next story, Pete?
Well, very topical because the second news story, Airbnb swallowing rental homes, was actually from Louis Christopher indirectly. Interesting data series from SQM Research. And I guess what they put together there is some data showing how the number of Airbnb listings has increased since 2016 from, broadly speaking, 100,000 to 200,000. And since around the peak of the vacancy rates for the residential market, for typical, the long-term weekly rental market anyway, the number of residential listings for rentals has dropped from about 140,000. Well, it's basically halved, I guess, over the same kind of time period. Now, I would just say, obviously Airbnb has increased, and I definitely would concede that it's an issue in the market. But I do wonder whether this is directly comparable, because an Airbnb listing, for example, you might pull together a website or a listing, but it might just stay there all year round, I guess, and you've got certain dates that you can book for. So I guess on that basis, you would generally expect to see the number of Airbnb listings just going up every year, which is actually what the graph more or less shows with a bit of a blip during COVID. So basically a doubling of Airbnb listings since 2016. But the typical long-term residential vacancies, well, that would be very cyclical. It goes up and down through the market cycle. At the moment, vacancies are very low. 6 years ago, they were very high. I guess they'll be low for the next couple of years. But as Nassim Taleb always says, every shortage is always followed by a glut. And I wonder whether that was probably what we'll see this time around. So I just don't know whether we're comparing apples with apples here, because an Airbnb might be a static home, a caravan. It could be just one bedroom, could be a granny flat. So I definitely think Airbnb is an issue in the rental market, but I don't know if it's the big issue that people think it is, because the rental market tends to be cyclical. And if it wasn't so many years ago, we're talking about an oversupply of rentals, now an undersupply. So I just wonder whether it's more of a cyclical issue than a systemic one.
Look, I do think there's certain pockets around the country and that have got inadequate number of housing and dwellings, and then they've got an over proportion listing of Airbnbs. Like they're tourist hotspots, and tourists are basically can pay more than long-term renters, and it's creating issues with key workers. And so there are pockets, but I think the governments and the councils in those areas are taking action. Look at the Byron Council, Noosa, etc. And so, however, as a broad country, 200,000 Airbnbs off 11 million dwellings, it's not like we've got a huge portion of our properties that are occupied under Airbnb. And I would say, like you said there, Pete, not all of it's, single apartments or houses that are full-time rented on Airbnb. People sometimes put them on for when they're on holidays or 6 months and they're living overseas, or it's just a room, or it's a granny flat, or etc. And so I think Airbnb is an easy target when the government have to admit that they've done a lot of things against investors for a good part of a decade. But it's easy for them to sort of come out and say, oh, the issue is Airbnb. I think it's like when back in 2015, foreign investors and, were the real issue why we have, massive increase in apartment prices and house prices is because everyone's buying our properties from China, which was just absolute nonsense, right? So I think it's just an easy way out for the government, hence why I think the Victorian government made a big point of it. Hey, we're going to start taxing Airbnb 7.5%, because it was an easy thing. It's, upsetting Airbnb investors is easy to do rather than upsetting, their major voters, which is sort of the housing market. So, yeah, I think it's something to watch. I do think it's getting a bit unfair, to be honest, with Airbnb. I think it allows people to rent out their properties and get an income on it that's their assets, whether they do that short-term or long-term. How is it right for the government to say you can't do short-term? Supports our economy, tourism. It gives people a lot of people want to use Airbnb when they travel, but then they don't want to use it in their own country. They don't want to have it in their own country. So I think it's a bit hypocritical as well. So, I think Airbnb and short stays here to stay, to be honest. But I can see councils and governments just attacking it more and more because it's an easy way to look like they're doing something.
It's politically more popular to whack a tax on Airbnb, I'm sure. So no question about that. And I do agree, actually, if you look in certain parts of the country, I think I've mentioned on the podcast once before, I stayed at an Airbnb on the lower North Shore, and I would say 80-90% of the block of units was on Airbnb, and every person you met in the elevator was another person in an Airbnb. And I think sometimes some blocks actually lend themselves to that style of rental more so than others. And yeah, maybe in some holiday regions it makes sense as well. I do think there's another factor as well, and some people just need a higher rental income to justify holding the property when they've got higher mortgage rates than they did a couple of years ago. So there's a bit of that going on as well. But yeah, we'll see how it plays out. I do think it's largely a cyclical issue, though, and I think the rental market will find its own level again in time. And this is just something you see in economics. Every shortage. I was reading this week that the price of mutton is down 70% from the highs because we had a massive shortage, and now we've got more sheep than we need. It's just it just seems to be the way things go. There's more production, prices go high, people stop consuming, and then things go the other way. And I guess the Reserve Bank will be hoping we see that with things like groceries and fuel prices and everything else in the economy as well after that period of inflation. But it's definitely the same with rental properties. Every cycle has a shortage, and then it's later followed by a glut 2 or 3 years down the track. So we'll see how that one plays out. So Chris, third and final news story this week, high house prices are killing off our entrepreneurs, John Kehoe in the Fin Review. So yes, on the one hand, high mortgage costs are definitely an impediment to entrepreneurs. And I think as well, potentially on the housing market point, potentially too many entrepreneurs go into things like real estate development or, dare I say, some of the professions that we've been involved in, Chris. But I guess there's another side to it, and that is, look, a lot of small business loans in Australia come from equity that's secured against a property or a home. And also a sort of note as well, I mean, if you go to, Palo Alto or somewhere like that, well, the home costs $5 million, and it hasn't stopped motivated entrepreneurs in the Valley or other parts of the US where entrepreneurship is so popular. So, yeah, I think there's definitely two sides to the story. And I think, there's often, I think, at various points in the cycle, there's people say, well, housing prices are hurting entrepreneurship. And there has been a bit of a drop-off in business startup rates since 2019. But there's been so many other factors at play as well, interest rates, COVID. So I'm not sure it's quite as clear-cut, maybe.
Yeah, I think you're right, Pete. I think there's a bigger issue here. It's tall poppy syndrome in Australia. It's, the success of our housing market, to be honest, it does, and the way that our tax setting is, tax-free growth on your home, the ability to leverage into housing at low interest rates, the returns on that, does make it sometimes more enticing than the risk of going and starting a business. And I do think it's much easier to get business finance once you've got a home. But, that stops the 25-year-old trying to start a business and get finance. It's very hard for them until they've got an asset like a home to leverage off. So I think overall, though, high house prices and if you then upgrade your home and it costs you an extra $1 million, then you're in a lot more debt. That's going to stop you investing more in your business. It's going to stop you starting another business because A, your cash flow expenses are really high, and B, if something goes wrong, you're going to have to sell because you've got all these bigger fixed costs and things like that. So I think overall, the argument that higher house prices meaning more debt is going to slow down business innovation, I do think it's true. I do think that's one of the negatives of having a system that's so heavily weighted towards the housing market. It's $10 trillion, the value of our housing market versus, say, $2-3 trillion in our stock market or $2-3 trillion in super. And so you can see we've got this, and even the commercial property market's only a few trillion versus the housing market. So then you've got, so all our wealth is there, majorly heavily weighted to residential property, but also our bank profits, our biggest companies. You've got the government in terms of our taxes, etc. So we've built this system, and I do think one of the things that falls out of this system is it means that you take less risk because the cost to rent, the cost to live, the cost to buy is so prohibitive that if you want to do that plus take risk and start a business, and if it fails, then you might not have homes, somewhere to live long term. Then I think you take less risks, and I would say that has played out. Hence why I think we've got less innovation in Australia than places around the world. Where in the US, I know you mentioned there around house prices are very expensive in some pockets, but overall their housing is much more affordable, compared to their income, and you can still get housing security, and you can move different cities, and you've got more options than in Australia. We've just got a handful of options at best on where you can live and start a business.
That's a big part of it. I'm going over to Boston actually next year for a wedding, and not mine, I should add, a family wedding. But there's so many different cities you could choose to live in the US, and I think Australia could learn from that. Really, we really should consider how decentralization can work better, because both you and I don't live in the city anymore than we used to, and there's definitely other parts of the country we could go to. I think we have this debate every year when Australia is now top of the table for median adults net worth, globally. So very successful country. You would definitely want to be at the top of that list, but if part of that is obviously the housing price story, and that's good for some people and less good for others. I think sometimes you need to be a bit careful about what you wish for. You mentioned that commercial property. I saw this week lender fears around falling office values. Well, yeah, that's right. The resi market's been strong, but CBRE, their latest sentiment survey showed that lenders are getting very concerned about falling office values and sort of a deepening downturn in the office because people aren't necessarily all back in the office. Maybe asset valuations aren't as high as they thought. And this is what could precipitate the end of the interest rate cycle and rates being cut. I think if lenders are getting very twitchy, particularly about office assets, much less so, I should say, on industrial properties, which seem to be doing pretty well overall. But yeah, so I think, when housing prices are rising, you get more construction, you get the wealth effect, more people are spending, people are happy to travel. When you get the downturn in the housing market, it typically brings a slowdown in all of those things, sometimes a recession. You don't always get the soft landing. So, yeah, there's always two sides to this stuff. And when things are, as you said, when the market's rising, people are looking for reasons and they're very critical. But it's actually just as bad sometimes when prices are going the other way. So, a bit of a case of careful what you wish for sometimes.
Yeah, and I think sometimes people who are property bears, and they're very much, pro, building businesses and, investing in equities and supporting other, startups, etc. They despise the housing market and they, I don't want to invest in that. And then they start going on a perpetual confirmation bias that the housing market's going to fall. They follow the big property bears out there and they're very anti and they come out with things like this, but they don't really, I guess, take a step back and think the system has already been built. This is, to change our system to that other system is that ideal world where people are very taking risks and starting businesses, and that's where it's much easier to get funding, and changing our tax system. You've got to have a huge change to our overall wealth. And how is that in the interest of the government and, the interest in most Australians who've got their wealth tied up in that? And so I think this is the issue it's been. We've built this system. Potentially we should look at ways of transitioning that to a better system, I believe, but that's changing our culture. The tall poppy syndrome in Australia is real. And, the fear of failure starts generations before that person is 24. It's, the parents are very... anti, go to uni, just get a job. They're not sitting there and saying, you know what, just start a business and it's okay if you fail. That's just part of life. We haven't got that sort of belief, I don't believe, in our country like I think other countries sometimes do.
Well, yeah, all very good points. I couldn't really disagree with any of that. I think now we're recording this midweek, Chris, and by the time this goes to air, there'll be more inflation figures out, which I guess will get the wires excited this week. I think, looking ahead to next week, we'll probably talk about some of that on next week's show. But I did see Woolworths this week saying grocery inflation peaked at 10.5%, painful, in November 2022. And it remained stubbornly high all the way through until March this year. But since then, inflation has come down to 3.4%. We've also got vegetables, fruit and red meat, and especially lamb, all in deflation. Also, the NRMA said fuel prices have fallen by 10.8 cents per litre this week and should fall into the high 170s over the next 2 to 3 weeks. That's from 197 cents. So there's some promising signs there that inflation is starting to fall away. Certainly other parts of the world are seeing that. So I guess that's all ahead for us to look forward to next week, Chris. And I guess by the time this goes to air, there'll be more information coming to light. I think the government really needs a break here because they're under a lot of pressure. The polls are diabolical and the cost of living is front of mind for so many households, I guess.
Yeah, I bet you're pretty happy that sausages, baked beans, bacon haven't kept going up, Pete. As a good Englishman, I'm pretty sure that's part of your staples. So
not as a vegetarian, no.
But I grew up in an English household with sausages and bacon, and the bacon buddies is pretty much baked beans or the things that we put in our trolley first. So that's going to get the English people be very happy with prices going back down. So hope you have a good week here, Pete. I think next week's going to be an interesting episode. I do want to do a big deep dive on what's happening in New South Wales because I do think it's, the issues there are probably the greatest, I would say, with rental crisis and housing affordability. And so whatever happens here might be a bit of a canary in the coal mine for what might happen in Melbourne, what might happen in Brisbane in, the years to come. And if you're making moves with your property decisions, you're like, okay, this is a good big direction change. How does that affect what I own or what I want to buy? And you could also apply that within Brisbane and Melbourne and go, well, yeah, in 10 years' time, if these issues start to become here, well, this is what the government might do, is what they just did in Sydney. And so let's watch this very closely as it flows through over the next couple of months.
You made a good point there. Changes in interest rates and the cost of living crisis, it's impacting some households profusely. Other households, particularly sort of baby boomers or people pre-retirees or retirees, far less impacted. And I guess that is the dichotomy and the challenge, I guess, for policymakers at the moment. And so as you said, there's a bit of a step change happening in the market, and it'll be interesting to see how things play out. You can catch me at Pete Wargent Blogspot. That's my daily blog, or at Pete Wargent on Twitter. And you can always track down Chris at Blusk, and do send us your property questions. So we always look forward to those, and we'll do a Q&A fairly soon as well. So thanks very much, Chris. Always a pleasure, and look forward to chatting with you next week.
Awesome. Let's do it, Pete. Cheers. Happy Sunday, everyone.
Cheers, guys.